Hello, everybody, and welcome back to another session of the Market Outlook series. So, thank you so much for joining us. And as the last few days, Nifty had been rallying, last 2 days to be specific. After 2 weeks of correction, we saw some relief rally. But whether this rally is going to continue or not, we're going to find out by analyzing the 3-minute, 15-minute, 75, and daily time frame progressively on Nifty. And then we will move on to Bank Nifty. Lastly, we will wrap up with the intersector analysis. And if you want my help on any position that you might be stuck in, I will tell you how to raise stock request queries with me. So let's get started with the screen share. We have the Nifty's chart right here, and this is the rally that we've seen so far, right? Now, this is when we were around the level of 22,500, the signs of negativity or correction were building up on the charts, and it was very evident that we were going to go in correction. Now, what you can see is since that correction, we've seen straight up 12 days of correction, took the index around 816 points lower. Since then, we've now seen some upside. So let's take a quick look at RSI and understand at what points did the 3-minute chart give us indications of these ups and downs or twists and turns. So the first indication was a strong RSI negative divergence and subsequent RSI negative range shift when the 3-minute time frame came below the level of 60, even though the prices were hovering still close to the top. Now, because obviously the 3-minute time frame is super sensitive to changes in momentum. Changes in momentum are not visible to the eye until and unless the trend changes. But remember, the momentum changes before the trend changes. But the 3-minute time frame, since it is so sensitive, picks up on that. Now, because it is also so sensitive, it has a tendency to give us wrong information time and again. That's why you have to be very careful, and you always have to analyze the higher time frames also. So here there was a first indication. After that, we went into negative range shift. As you can see, the RSI was shy of coming above the level of 60. In fact, on the downside, it started creeping below the level of 30 in a regular manner. This was a telltale sign that we were in the negative range until the point where we saw a positive divergence on the index, a very small positive divergence. However, that positive divergence did not last. Now, mind you, this positive divergence is actually unfolded between these 2 points, not the immediate points. After this small positive divergence, there was a bit of a rally in the Nifty prices. However, that did not sustain very long because as soon as the peak was forged, again, we saw a negative divergence develop, and as such, we went back into correction. But yeah, there was this positive divergence, and soon enough, we saw a gap down and the continuation of a rally. However, on the 20th of March is when we actually saw proper positive divergence develop on the 3-minute time frame. Now, if you were part of my Telegram channel, you would have seen this development shared on the channel itself. So on the 20th March, that is on Wednesday, I mentioned that RSI positive divergence has been noticed on the 15-minute time frame. This means that we can see some relief rally, and Thursday and Friday last 2 days have been a relief rally in the market. Now, if you're interested in joining this Telegram channel where I share my market insights, click on the link which has been shared in the comment section or search Trade with Kavita in the chat. Remember, there are a lot of fake channels running in my name, so make sure to click the official link and join the proper channel. Now, the problem is in the 3-minute time frame that even though we've created this new high at 27,175, new high relative to the last 2 weeks activity, the problem is that another negative divergence seems to be forming on the price already. So remember, we started this correction with a negative divergence, and since that negative divergence, for the first time, we've seen another negative divergence. What does this mean? My expectation would be that on Monday, maybe the first half, we can see some upward activity or maybe a gap up opening. However, the overall expectation for the next week is again bearish. I hold the level of 22,250 as an important resistance zone. And if you notice this wave drawing on the chart, what you will make out is that as per my Elliott wave count or as per my analysis, I see that the primary bull trend or the intermediate, this was actually not the primary, this was the intermediate trend, has come to an end and is now in correction. This view gets enforced also by the fact that the level of 21,850 got breached in the first leg of the correction itself. Right? Now, because that was the fourth wave of the fifth intermediary, I know it sounds like absolute nonsense, but those who know will understand. Basically, the breach of 21,850 is the primary reason why I believe that after this relief rally, which will take us to the level of 22,250, we can see market correct further. Up to how much? My support level is 21,000. So what should you do? We'll come to what should you do in a while. Let's move on to the 15-minute time frame and analyze that also. So this is the 15-minute time frame. And on the 15-minute time frame also, if you see, there is a negative divergence developing. So here, for a very brief moment, the RSI went above the level of 60, which is positive, which indicated that the price was going to go higher. And the price did go higher. We created a higher high. But because this high on the RSI has not been sustained and we have a negative divergence develop here, what I expect is that this rally will not continue much further. Maybe it can test the 22,250 level for good, but the downside is expected to resume soon. If the price of Nifty does tend to break above the resistance of 22,250, then we can expect a little bit more rally, maybe up to 22,500. Moving on to the 75-minute time frame. 75-minute time frame is giving us a bit of a mixed signals. And what do I mean by mixed signals? You will see that there's been a massive negative divergence, which was completed on the 1st of January. Since this January, basically since we entered the year of 2024, what we've seen is a lot of choppiness and a lot of bearishness in the market. Not bearishness, a lot of choppiness in the market with a bit of a bearish skew. Now, this actually began with this negative divergence on the 75-minute time frame. The problem is that since this negative divergence occurred, even though we've seen higher highs, RSI has still been shy of going above the level of 60. And it was only when the RSI actually took a proper resistance at the level of 60 that we've seen this correction begin. Now, the problem with this correction is that it has already breached below the level of 40, which makes me a little bit uncomfortable. So what I would do is I would set an alert right where the high of the RSI sits at the level of around 63, and I will wait for the market to breach it. Another negative point is that the MACD volume indicator. So I'll just quickly show you the volume indicators settings because a lot of people seem to be very interested in how I plot my volumes. So I plot my volume using the MACD setting, and it is 100 and 500, 100 fast length, 500 slow length, and 9 EMA, 9 signal smoothing is on a factor of 9. The source, remember, should be set to volume. So the volume indicator is added, but it is set as invisible because I don't want to look at the raw volumes. I want to look at the MACD. Why am I looking at the MACD volume indicator? Because it just makes the changes in volume pop out by using 4 different colors. And that is what I want. I'm more interested in the change in volume versus the absolute volume levels. Now, what we can see, which is another bad news. Okay, we'll discuss that on the daily time frame. So the 75-minute time frame, I would say, is lukewarm. It's not looking absolutely bearish because we are still holding above the level of 40, but it's not looking very bullish either because we are also not able to sustain above the level of 60, 65. My expectation again is that the level of 60 on the 75-minute time frame is going to get tested on the RSI of 25 period, and then we are going to head lower to retest the level of 21,000, and there might be some consolidation that occurs there. Now, if you look at this daily time frame, unfortunately, it is the daily time frame which gives the worst news. The daily time frame is outright showing a very big negative divergence with volumes that are growing stronger as the price decline increases. And if you see, today's and yesterday's activity of positivity hasn't seen a lot of positive action, which is again a cause of concern for us. On the daily time frame, another thing that you must notice is this yellow EMA. This is a 50-day EMA. If I show you a little bit of past activity, what you will notice is that the last time this 50 EMA was breached was first time over here it was tested, and then it was breached over here, after which a small bounce happened and the price declined. So here also, this was the end of the bull run. So after the bull run ended, so if we zoom in a little bit here, like I said, if 22,250 gets breached, then we might go up and retest for the next few weeks, or at least the loss harvesting season gets over. It's better to stay conservative in the market and focus more on preserving your capital than taking positions in new stocks. If you are buying positions in new stocks, be sure to trail your stop loss very diligently and update them every single day. I am well aware that in the last almost 1 year, most people, especially the new people who've entered, they're not very disciplined. The market also coddled everybody into being a little bit careless. But when the market turns bearish, it requires you to be more disciplined, because for every time you slip on discipline, you lose points on your capital, which is against the goal that you've come with. So your goal in the market, or when you're doing swing trading, is to grow your capital, not to book profits, not to protect from losses, simply to grow your capital. In order to grow your capital, you need to make sure that you're able to protect your capital and your unrealized profits from unnecessary erosion. That is only possible through using stop losses. Now, let's just quickly tell you about the stock query form. If you're interested in, or if you want to ask queries to me, then make sure that you visit this link. This link is .in/stock request. So the link is also mentioned here, and I will make it available on my screen moving forward. So anybody who's interested in getting their stock queries answered by me on screen, I request you to go and fill up this form. At the end of this session, I will be answering 10 queries for the people who submit this form only. Right? But if you have any questions about my methodologies or how to get connected with me, or anything that is not a stock query, you're more than welcome to add a comment, and during the session, I'll keep answering your questions. Let's move on with the Bank Nifty chart. I know I do not paint a very positive or a very promising picture of Nifty, but that's not my job. My job is to share my insights based on objective analysis. If you look at the chart of Bank Nifty, thankfully, Bank Nifty looks slightly better than Nifty does. In what sense? Let's go to the 3-minute time frame. So on the 3-minute time frame, what I can see here is, okay, sorry, I take that back, because on the 3-minute time frame, even on Bank Nifty, now we can see this RSI negative divergence. right? If we see on the 15-minute time frame as well, there is a very small, but there is a negative divergence, which does not make me very comfortable. Also, there is resistance from this 47,250 level, which is, I would say, parallel to the 22,250 level on Nifty. Now, looking at the 75-minute time frame, again, bearish divergence, we saw a little bit of improvement in the range of RSI on the 75-minute charts, and that is actually what I meant when I said, that is what I was indicating towards when I said that Bank Nifty charts look slightly better. So what I would suggest here is, since the 75-minute time frame is heading upwards on the RSI, I could believe that banks like maybe HDFC, SBI could do better in the next few days. However, I personally wouldn't participate in them because banking stocks become very unreliable during market. Also, if you notice, the volume has not shown any uptick whatsoever in the upside. Rather, within the downside, this volume has been really subdued. I would say there was increase in volume activity when the price started declining right off the top. Makes sense, but ever since the price has been like in an upward move, we've not seen a lot of volume participation overall in the market. Another main reason could also be the tax loss harvesting season. If you're not aware what is loss harvesting, I would suggest just open GPT and ask what is tax loss harvesting in India in the month of March, and I will be able to explain it to you in much simpler manner than I would. Now, coming back here on the daily time frame as well, I see that the level of 60 has acted as resistance when the Bank Nifty tried to retest the level of 48,000, which is again not very good news. My expectation would be that 47,250 is going to act as resistance. If it does not, then 47,000 or 47,850 or 48,000 roughly will act as a resistance again. So the overall trend in the market continues to remain bearish, and we can expect more correction to continue. On Bank Nifty, my target for the overall correction is 44,000, which is parallel to the 21,000 level we observed on Nifty. Now, with that, let's take you to my indices comparison chart. A lot of people always ask how to make this indices chart. It's very easy. Plot CNX 500 on the chart and then click on this plus button. Just select, like I have selected all of these indices. You will not be able to select, you will need to search the names. So these are the name of indices. Feel free to take a screenshot quickly. First screen, that's the second screen, that's the third screen. So just plot them and you'll get the same looking chart. Change the colors to whatever you want them to be. Now I want to determine from which day I want to compare the prices. Let's do it from the 7th of March. Why? Because we topped out on the 7th of March. So on the 7th of March, let's see who has performed, or rather outperformed the market since the 7th of March closing. Okay, I want to see the closing price. So which means the next day's opening price. So on a relative basis, all the stocks have declined from their own opening. However, the auto sector has done really well. And I noticed that Eicher Motor has especially been an outperformer in this market. Even Maruti has done pretty well. Now, this rally in the auto sector has been predicted for a while. Last few weeks have been saying that the auto sector does look positive compared to other sectors in the market. Consumption sector close behind finance, CNX Finance. Now, this is very interesting because I do believe that the finance sector is potentially lurking at developing fresh, strong signals, which means that when the next leg of rally comes, which I expect would be in 2 to maybe 3 weeks, I would expect the finance sector to do better than it has done in the rallies gone by. One candidate that I'm definitely eyeing is the IDFC First Bank, which has almost not participated whatsoever in the rally of the last 1 year. But I do expect it to get better going forward. I'm still waiting on confirmations. So remember, this is not a recommendation at all. The healthcare sector has also done better. The FMCG, the pharma, healthcare sector, all of them are trying to hold on to themselves. But remember, the pharma and the healthcare sector has already rallied a lot. While there might still be opportunity for long-term trading, if you are specifically focused on short-term trading, be sure to hold them with stop losses in place. The energy sector is taking a bit of a beating. Realty sector is expected to take a beating because last 1 year has been super bullish for it. Same goes for the PSC and the PSU bank sector. I would also like to warn you about the CNX IT sector or the IT sector in general, because I feel like some more correction can happen there. The IT sector continues to look very attractive for long-term investments, but for short-term trading, it looks not so attractive. So Sachin is asking, hello ma'am, how to get regular calls from you? So if you are somebody who's interested in swing trading, then allow me to take you to my swing trading subscriptions. So you can search EXP-Invest.in/subscription and you can check out my Trade Together program, in which I give you swing trading recommendations. Right? Those recommendations are given on the Telegram channel. As you can see, for each premium channel, for each plan, there is a dedicated premium channel. And when you subscribe, you get updates like buy now, trail your stop loss, change your stop loss level, and exit the stock from me. Which sector can cause bearishness in Nifty as per technical analysis? Shri Praveen, this question that you've asked, it's not a very apt question, I would say, because when you look at the Nifty chart and do the analysis, you can only do a price action analysis. Now, in order to predict which sector might have the most effect, will require a much deeper analysis or weighted average analysis of different sectors, which form the constituent part of Nifty. While it is a very good idea, it is not something that I do. So unfortunately, I cannot answer that question for you. Awesome. So with that, let's get started and let's look at some analysis. So if we have some members who are attending the session, who are return attendees, if you could just indicate whether the stream quality today is a little bit better than it has been in the previous sessions, or is it worse, or is it just the same, it would be really helpful to me because I'm trying to diagnose some problems. So your feedback is much appreciated. Kitty is asking, Nifty has made new lower low. Can we consider as break of structure? Kitty, exactly when do you mean Nifty has created a new lower low? Because when you're talking about lower lows or lower highs or higher lows, you need to for sure make reference of the time frame that you're talking about, because waves unfold on many different time frames at the same time, or many different levels or wavelengths at the same point of time. So right now I don't see lower low, especially since 28th March onwards, and I'm looking at a 3-minute time frame. But yes, if you look at a larger time frame like a 75 or a daily, and if you compare the lows of the 20th March and the 29th February, then yes, there is a lower low, and that is also the reason why I think the market is bearish, and this is just a throwback to this new correction that has started. So between 19th and 20th, what you're calling is a lower low is actually the bottom formation. I know that there are people out there who encourage looking at only price to make your decisions, but it's not enough. You need to deploy some indicators, especially momentum indicators, to pick up on that subtle change in momentum. So if you look at the RSI of 25 period, you will clearly see a positive divergence which gives you the early on indication that something has changed in the underlying momentum and a probable positive rally can come in the market. Right? So I hope that helps. With that, let's move towards the analysis for some of our amazing members who have been really kind to fill up the form super quickly as soon as I shared the link. Somebody's asking me the question, ma'am, what I want to know from you, how to trade Bank Nifty without any losses. My friend, you cannot trade in the market without losses. You have to focus on keeping losses small and riding the profits. There is no such thing as trading without a loss. You need to desensitize towards losses. You need to accept them as a normal part and parcel of the game. And you need to control your biases, which compel you to make wrong decisions and hold on to your loser stocks versus sell your winning positions too soon. So we'll move on. We have a request for the stock call. Let's, on that note, also share my screen because I want all of you to be able to see the analysis that I'm doing. And click on that link right at the top of the screen. You can't click on it. I'm sorry. You're going to have to see it and copy it, or you can click the link in the comment section and then fill up the form to submit your stock request as well. So Shri Piston, 1700. So not sure if you bought it recently, but seems to be doing pretty well for you. I think the stock has a bit of a liquidity issue, which doesn't make me very comfortable. But if you're okay holding the stock for the long term, by all means, continue to do hold because the underlying trend looks quite bullish and I would expect it to continue. Now, the weekly time frame looks strong. The daily time frame also looks strong. I have to suggest a stop loss, and the stop loss for the stock would be 1656 is where your stop loss should lie. And as far as the target is concerned, it's very hard to give the target in the stock, but let me draw some trend lines and let's see if we can maybe capture this trend through that. I can see the overall momentum of the trend changing very frequently here, which is not something that makes me comfortable, but we'll try to work with what we've got. And based on the trendline analysis, the first target which I can suggest is 2600, which honestly is very good risk reward ratio, at least from the current market price. So anybody who might be watching and wondering, I would not recommend you to make a fresh entry in the stock right now. But since Siddharth has been holding the stock, I would suggest that you can continue to hold and use the stop loss that I have just recommended. Moving on to Sananda Hedge request on Balu Forge Industries Limited. So Sananda, when you mentioned the name of the stock, okay, fine, this was good. Can we go big in this as it is lower than average price? I don't know what you mean by lower than average price, but if I look at the trend, it looks like it just topped out and started correcting with high volumes. So I would not recommend you to go even small in the stock. Avoid for the time being. So Mukesh ji is asking for BEL analysis of BEL, thinking of trading, but also as a long-term investment. So I see this being a very common theme among people where they talk about trading and long-term investing at the same time. And I know for a fact that they're talking about both short-term and long-term. Not very sure what they mean. But when you approach a stock, it's best to be very clear in your expectations from the stock to have objectivity in your analysis. If you keep confusing your trading positions with your investment positions, it'll take you nowhere. Now, it is a super trend stock, which means if you take a look at this weekly time frame, it has a tendency to get into massive upswings and then massive corrections, massive upswings, massive correction, massive upswing, massive correction, and again massive upswing. So since this stock is already moved up so much, I do not have a lot of expectations, but somehow the rally keeps going. Honestly, my target on the stock was somewhere, I'll tell you here. My target on the stock was somewhere around 170, 174, but that has been achieved and the stock continues to go up. Also now, if I tell you, see this last leg of correction that has happened against high volume, which is not very comforting, because before this, if you see, whenever the correction was happening against weak volumes, which was an indication that the uptrend is going to continue. Now, even on the 15-minute time frame, I can see that negative divergences have become stronger and negative range shifts have become stronger, negative divergences have become stronger, and this is an indication that the momentum is becoming weak. Overheated stocks like BEL should be avoided for the sake of your capital's preservation. And I don't recommend either long-term investing or short-term trading in BEL for the time being, since it's really overheated. If you are interested in long-term recommendations, I would suggest you to join my long-term plan. Again, you're more than welcome to join my Telegram channel for the first information about how to get connected with me and my team for a consultation. So I am noticing that a lot of members are continuing to post their questions in the comments for stock analysis. I request you to kindly go on the form and fill it up if you genuinely want me to analyze the stocks, because as a SEBI registered analyst, I need to keep tracks of whom I'm telling what. So kindly fill up the form and let's do things in a bit more structured manner. Let's also take a quick look at these comments right here. Oh, Shri Praveen, thank you so much for your feedback that the quality of the stream is much better. I really appreciate you taking the time. All right. Let's move on to the next query. We have Shalin Patel asking for Tata Power. Short-term target. I think you've mentioned the wrong cost price. You mentioned 949. I really hope that's the wrong price. Has to be, because when was the last time? So I'm guessing maybe, I don't know, maybe the stock has gone through splits. Not that I can see the information. It did go through split, but that was like ages ago and it wasn't like a massive ratio either. So anyway, this is also a super trending stock. And my personal target on Tata Power is around the level of 600, 610, 620-ish. So fresh entry, naturally not recommended at all. But if you are currently holding on to the position in Tata Power, then what I would recommend is that for the short term at least, you maintain a stop loss at 366, which means if the level of 366 or the level of, actually make that, just to give the room stock a little bit more breathing space, make that 361. With the stop loss of 361, you can continue to hold on to this position. And like I said, you can maintain the target of up to this trend line, 600. There is nothing stopping the stock from going up there. But what is more important is that you need to trail your stop losses. And if any point of time, suppose next couple of weeks, you're expecting more correction to unfold in the market, if your stop loss gets tripped, let it go, book some profits. And then when the stock comes down, I would expect it to fall almost 17-18% to the level of 18. When it does that, re-enter the stock again. Right? Let's move on. We've got analysis request from Mr. Vijit Rajput on Ashok Buildcon. So he's asking whether he should hold or book a loss. This is 181 rupees. So you've bought the stock at a bit of a high, and then again, this is, I believe, engineering and construction. So bought the stock after the rally. You know what I like to say? Never buy a stock after the rally. Always buy stocks before the rally. And how do you do that? Either by doing analysis yourself. If you don't know how to do analysis, then by working with a stock analyst like me. So what I see here is that the negative range has started to settle in. But does that mean the end of the world? It does not mean the end of the world, but it does mean correction is unfolding. Because if you look at the last time this happened for the first time, it was actually the point of beginning of a fresh correction in the stock. So it breached this a little bit. It breached the level of 30 a little bit. What's going on? Breached the level of 30, breached the low, breached important EMAs, and then took a little bit of a throwback and continued to decline. What do we see now? We see that the 100 EMA or the 50 and the 50 EMA, which had been acting as key supports, has now been breached, and the level of 30 has been breached, and there is RSI negative divergence. So what does all these things mean? That this little throwback that you're experiencing right now is a very good opportunity for you to exit the stock and book your losses while they're still small. If you choose not to exit the stock right now and continue to hold, there is a pretty good chance that you might see another at least 20 to up to even 30% of correction in this stock before it at all makes its mind to continue its rally. Now remember, this resistance 195 is also very important resistance. So you basically bought the stock right where it was time to actually book profits had you bought the stock earlier in the month of April. This is why again I'll emphasize, do not buy stocks after the rally. This is what happens. You get stuck at the top because that is what 95% retail traders do. We've got Mr. Shivam asking for campus active where cost price, average cost price is 262. So I've been following the stock campus and I believe that it is building up to something. So it is a good idea to hold on to the stock, but don't buy the stock all at once, or I hope you didn't do that all at once. It's better to buy the stock in small tranches and accumulate it every time it takes a correction, because I think it has certain setups within its business model which can help it perform well in the long-term view. For now, it's hard for me to give any stop loss or target, but this is a pure fundamental call from my end. As in, this is a pure fundamental candidate from my end. Technically, except for the fact that despite of the sharp price decline, the RSI has been holding itself above the level of 30, which kind of tells me that we might start seeing upward momentum, sustained upward momentum soon in the stock. Now, let's move on to Tex Rail for Mr. Gautam, who's bought the stock at 7. So you still bought the stock at a little bit of a high. So I can see that I'd added this comment because I entered the stock right at the bottom, and I can see that the rally has unfolded quite well. I think the purchase that you've done, you've naturally done it a few days back in the decline itself. I would suggest you keep holding on to this stock because the unfolding rally is quite strong, and I would expect this rally to also continue. In fact, if you have the bandwidth, you can add more. But just one thing to remember is that this is a super volatile stock. So the smallest stop loss that I can suggest to you would actually be 140 rupees, which is a huge 15-16% lower than the current market price. That being said, even the target on the stock is pretty liberal. It's 53% at the level of 255. So if you have that kind of risk appetite to hold a stock with such a big stop loss and a big target, a high risk reward ratio, which is more than 3, go ahead. But if your risk appetite is low, then maybe steer clear of this stock. Now, for Mr. Manoj, let's take a look at Webel Solar. You can see that very super strong underlying trend is unfolding here. And the volume activity is also pretty strong. The liquidity, unfortunately, I don't like it. Not a stock that I would touch with a 14-foot long pole. If you are holding the stock for the long term, great. If you're holding it for the short term, bad decision, because if you get stuck on the wrong side of the trend, you will see 30-40% of your capital get eroded before you get a chance to say, oh no. So better to not play it like that. But your cost price is 350. So if you want a stop loss for this stock, you can maintain a stop loss at the level of 350, which is again 15%. And as for the target, I would expect it to continue this upward rally, which it is unfolding in. Usually for such illiquid stocks, it's a little difficult to give the targets, but let's see. Okay, so this is worrying that it shows that it's already reached the resistance, because every time it comes to resistance, it kind of takes a massive correction. So it's imperative that you use your stop loss here. It's great that the 20 EMA of the weekly time frame held. I mean, this might just be a correction, but you also never know sometimes. So what worries me here is that here also we just stopped out without any warning. But since this is starting to correct, we could expect some upside here. It's very hard to actually give a target for this. So I will just set the target down at 500 rupees. If the target of 500 is crossed with, and I'll have to do further analysis of how the volume looks, how the momentum indicator look. So I would suggest you set the stop loss at the level of 350 and wait, and set an alert at the level of 500 rupees. And when that gets breached, don't sell the stock. First, come and check in with me. So with that, we've come to the end of today's session. I hope I was able to add some value to you and tell you something which you might not have heard before, or I was able to influence your own market process in a better way. If I did, then do connect with me by joining my Telegram channel. And I will see you again on Wednesday in the Let's Get Technical series at 5 p.m. same place. Also, from the month of April onwards, I am starting a bootcamp in which I will be teaching you my advanced technical analysis training. The first batch is about to get over. It'll be over in the month of April itself. That was done on a weekly once basis, but I realized it's too slow, and the participants also got a little bit impatient somewhere in the middle. So in order to deal with that, I'll be starting this bootcamp where I will cover my entire swing trading ecosystem from technical analysis to how to build a watch list to how to run the screeners, how to plan your entries, how to look at your indicators, whether chart patterns and candlestick patterns are important, and if yes, to what extent. And also I will be teaching you about decision making time frame. I'll be teaching you about stock personality concepts which are not categorically presented out there, concepts which I have condensed after years of experimentation, trial and error, and experience in the market. So if you're interested again in this bootcamp, the information will be posted on my Telegram channel in the month of April. Do make sure to join my Telegram channel and stay tuned in the upcoming sessions to know more. Thank you so much for joining. Today I will see you again on Wednesday at 5 p.m. And I think that's going to be after Holi. So wishing everybody a very advanced Holi, and may the colors of the festivities fill your life and have a lot of fun. Thank you so much for joining in.